Let's zero in on the banks again. We are joined once again by Brian Madden, Chief Investment Officer at First Avenue Investment Counsel. What are your thoughts on Bank of Nova Scotia? Are you intrigued there by the potential for investors to fall back in love with the stock?
Tentatively, but not really in the convinced camp. It's not a stock that we've owned over the last few years at First Avenue Investment Counsel. We run pretty focused, high conviction portfolios, so we want to own the best of the banks, not all of them, and so we own three, but not Scotia. That said, with the CEO change about a year and a half ago, Scott Thompson coming in, I did take a full day to attend their investor day in late, I guess it was 2023, and here.
A full day?
Yeah. Yeah, you go deep when you do a deep dive like that, but it's a great way to brush up on a company you're dusting off the file on. So I think the strategy is intriguing. Their execution against it is somewhat curious.
What do you mean by that, Brian?
Well, I think what Scott Thompson and the rest of the team laid out at that investor day was we've got businesses that we're going to grow and feed capital to, and we've got businesses that we will maintain their competitive position, and we've got businesses that we will put on a short leash and give them sort of 6, 12, 18 months to fix up, or we'll exit them, either by winding them down or divesting them. So the first major sort of repositioning transactions they have done since that investor day were a meaningful but still minority stake in a U.S. regional bank, the name of which escapes me, but it's in the Midwest and Buffalo and stuff.
Okay, is that KeyCorp or?
Yeah, I believe it's KeyCorp.
Okay, right, okay.
So no clear or obvious path to control there, not clearly synergistic with the rest of their footprint, and it was sort of like capital looking for a home, and it found it, but wasn't clear how that fit into the strategy, notwithstanding that they said they wanted to, expand their U.S. business and footprint. And then they were endeavoring to get out of some of the LATAM markets where the promise of returns never really materialized commensurate with the risk. And so they did divest, I believe it was a Colombian business late last year. But again, they didn't really get out of it cleanly because they took back equity in a larger bank that bought the stake from them. So it would have been cleaner to get a cash exit from that business. So, so far, I think it is still a show me story. As always, strategies look great on PowerPoint slides and on whiteboards, but until we see the black ink on the financial statements, we're not unduly tempted to buy that stock relative to the other opportunities in Canadian banking.
Yeah, so they transferred operations in Colombia, Costa Rica, and Panama, and they took said they would take an after-tax charge of 1.4 billion Canadian.
Yeah, I mean, the market will often look through these write-offs because the market is usually smarter and faster than the accountants, and it will write off the value of a business that's impaired or underperforming much quicker than an accountant will, and you'll see it in the share price and the derating of the price-to-book ratio of the stock. So, that is obviously an after-the-fact indication that the capital was not well deployed in that business. But shouldn't have been terribly impactful to the future path of the share price performance. What is of more concern is that it's not a clean exit. It's a take back of an equity stake, much like this minority stake that they own in KeyCorp now.
TD, are you interested there?
We like TD. That might be a contrarian view. TD has certainly come under dark clouds, on both sides of the border with regulators and investors over the last 2, 3, 4 years. But we think they've turned the page. CEO change was overdue and welcome. They accelerated. Ray Chan coming into the top job a few months ago. We really liked them divesting their stake in Charles Schwab. That was not a good business. That is basically a race to the bottom.
With zero commissions and stuff like that?
Absolutely. And just as a sidebar, Andrew, we're seeing on a smaller scale the same sort of market share grab and price war playing out in Canadian discount brokerage with huge cash incentives for clients to transfer accounts to some of the big discount brokers.
And National Bank is into the zero commission game.
National is, Simple is, Questrade is. The banks aren't necessarily following suit, but they are sort of buying market share with these cash incentives. So, that is sort of a smaller piece of the equation for TD. It's more so monetizing the Schwab stake. They've said they're going to use the proceeds to buy back their shares. We applaud that decision. Their shares are undervalued. And what they do from there, first and foremost, top priority for that management team needs to be cleaning up the U.S. business and getting a clean regulatory bill of health so that they can get the consent decree lifted and start growing there again.
Always great hearing from you, Brian. Thank you very much indeed.
Thank you, Andrew. Great to be here.
Brian Madden, the